Assalamualaikum warahmatullahi wabarakatuh. So we are from Group 7. We're going to discuss about our project. First of all, we're going to introduce ourselves. My name is Muhammad Taufik Ibrahim Rashid.
My name is Muhammad Rasul Rusli.
My name is Tengku Aida Hadi bin Tengku Hanafi.
My name is Muhammad Asril bin Sudarmin.
So for our project, we choose two companies to comparison, which is YTL Power International Berhad and Malakoff Corporation Berhad. I'm going to start with company's background. First, YTL Power International Berhad. For the core business, they have the power generation, gas, coal and renewable energy, water and sewerage service, telecommunication and 5G service, also have utilities management. For the YTL Power International Berhad target market is governments and national utilities, industrial and commercial electricity consumers, international markets such as Malaysia, Singapore and United Kingdom, also have individual consumer and business such as telecommunication and digital service. So for the competitive position, operate as an independent power producer IPP, compete with other IPP local and international, strong diversification and global presence, focus on renewable data centers and digital economy, competitive through innovation and strategic partnership. For the sector, utilities and infrastructure sector, independent power producer IPP, multi-utility group such as power, water, telecom, and digital infrastructure. So next, we're going to the Malakoff Corporation Berhad. So for the core business, also same like the YTL, electricity generation, coal, gas, and renewable energy. For the renewable energy such as solar, small hydro, biogas, and biomass. Environmental solution and waste management such as alam flora, water desalination project, operation and maintenance service. For the target market, they have the national and commercial electricity off-takers, industrial power consumers, government entities, domestic market and international markets such as Saudi Arabia, Bahrain, and Oman. For the Malakoff Corporation Berhad competitive position, they are leading independent power producer IPP in Malaysia, large generation capacity and diversified segment, stable revenue from long-term contract, strong renewable energy and environmental service portfolio, also well positioned in energy transition and sustainability. For the sector or industry, utility sector, Malaysia's largest independent power producer IPP focus on power generation and environmental solution, but does not own the national transmission grid. So we move next, which is industry overview and accounting standard. For the YTL International Berhad, operates in the utilities industry, primarily focusing on electricity generation and power related infrastructure. This group is involved in the development, ownership, and operation of power plants, energy-related assets in Malaysia, and also in overseas. For the financial reporting framework, they have four, which is MFRS 116, MFRS 15, MFRS 16, and MFRS 9. We start from MFRS 116 first, which is property, plant, and equipment. Applies to long-term assets such as power plant, machinery, and infrastructure. YTL Power capitalists and depreciates their asset over their useful life to reflect ongoing operation. For the MFRS 50, which is revenue from contact with customer, is applied by YTL companies, for example, YTL Corporation Berhad, YTL Power International, YTL Land and Development in their financial statement. MFRS 15 is particularly important for accounting students like you to understand how revenue is recognized in practice. So for the MFRS 16, which is leases, MFRS 16 requires leases to be recorded as right of use asset with corresponding liabilities. YTL Power apply this to lease land, building, and equipment. And the last, MFRS 9, financial instrument. MFRS 9 deals with financial instrument. YTL Power applies it to receivable, borrowing, and hedging instrument, assessing credit risk using the expected credit loss model. So we move to the Malakoff Industry Overview and Accounting Standard. Malakoff Corporation Berhad operates in the utilities industry, primarily engaged in power generation and energy-related service. The group owns and operates power plant that supply electricity to customers under long-term contractual arrangement. Same like the YTL, they also have MFRS 116, MFRS 15, MFRS 16, and MFRS 9. So for the MFRS 116 PPE, MFRS applies to long-term assets such as power plant, machinery, and supporting equipment. Malakoff capitalities and depreciate this asset over the estimated useful life to reflect their operational use. For the revenue, which is MFRS 15, governs revenue recognition. Malakoff recognized revenue from electricity generation and supply contract based on the actual electricity delivered to customer. For the MFRS 16 leases, requires leases to be recognized as a right of use asset with corresponding liabilities. Malakos apply this to long-term leases to operational sites and equipment. And lastly, for the MFRS 9, which is financial instrument, deals with financial instrument. Malakoff applies it to receivable borrowing and risk management instrument, assessing credit risk using the expected credit loss model.
So next, I will explain the horizontal analysis, which compare financial performance across two periods to identify trends achieved over time. For YTL Power International Berhad, the results show that revenue declined by 2.17% in 2035. In addition, net profit decreased by 21.92%, indicating pressure on profitability. However, total liabilities decreased by 9.45%, while equity increased by 4.94%, suggesting that the company maintains a relatively strong financial position despite lower earnings. For Malakoff Corporation Berhad, although revenue decreased slightly by 1.07%, the company recorded a significant improvement in net profit, moving from a loss in 2023 to a profit in 2024. This indicates better operational efficiency and improved cost management. Moving on to the vertical analysis, this analysis evaluates each financial statement item as a percentage of total revenue or total assets, to understand cost and asset structure. For YTL Power International Berhad, property, plant and equipment (PPE) represent the largest portion of total assets, accounting for over 47%, which reflects the capital-intensive nature of the utilities industry. In terms of expenses, cost of sale account for more than 70% of total revenue, contributing to the decline in both gross profit margin and net profit margin in 2025. For Malakoff Corporation Berhad, the asset structure is also heavily concentrated in property, plant and equipment (PPE), indicating high reliance on power generation assets. Although cost of sale remains high, the increase in other operating income helped the company return to profitability in 2024. Nevertheless, the company's profit margins remain relatively thin compared to YTL Power. Overall, the horizontal analysis showed that YTL Power demonstrates stronger earnings stability, while the vertical analysis indicates that Malakoff continues to face high cost pressure despite its recent recovery in profitability.
Okay, next, we are going to ratio analysis of YTL Power International Berhad. YTL Power International Berhad continues to record positive profitability. However, its performance show a declining trend. Both gross profit margin and net profit margin decrease, suggesting rising cost of or reduced operating efficiency. Return on asset also fell, indicating that the company is generating lower returns from its asset base. In terms of liquidity, YTL Power remains strong. The current ratio and quick ratio increased, reflecting a good ability to meet short-term obligations. Efficiency ratio show a slight decline as account receivable turnover decreased, although the reduction in days sales uncollected indicates some improvement in receivable collection. The debt to equity ratio increased, implying greater reliance reliance of debt financing and higher financial risk. Next, for Malacca Corporation Berhad. Malacca Corporation Berhad experienced a significant deterioration in financial performance. The sharp decline in gross profit margin, together with negative net profit margin and return on asset, indicates operating loss and inefficient use of assets. Despite weaker profitability, Malakoff liquidity position improved as shown by higher current and quick ratio, suggesting better short-term solvency. However, efficiency weakened due to lower receivable turnover and longer collection period. The increase in the debt to equity ratio highlights a higher level of leverage, which increase financial risk, especially given the company loss. Overall, YTL Power demonstrates stronger financial stability and profitability compared to Malacca, although its performance is gradually weakening. In contrast, Malacca faced serious profitability and leverage challenges despite improved liquidity. Therefore, YTL Power YTL Power is in a better financial position, while Malacca requires improvement in cost control and debt management.
Okay.
Okay, the last part is evaluations and investment decision. So to make a decision, we make by the category, profit trend, cost structure, liquidity strength, debt management, asset structure, and industry risk. So for YTL Power International Berhad, profit trend consistently profitable in both period, strong net profit margin despite decline in 2025. For Malacca Corporation Berhad, net loss in 2023, recovery to profit in 2024, profit margin remained in. For category cost structure, WTL Power International Berhad, lower cost of sales relative to revenue maintains healthy gross margin. For Malakoff Corporation Berhad, very high cost of sales in early period, improved cost control in 2024. For liquidity strength, WTL Power Berhad, Power International Berhad, strong and consistent current and asset test ratio, good short-term financial flexibility. For Malakoff Corporation Berhad, slightly higher current ratio than WTL in later period, liquidity improved in 2024. For debt management, WTL Power International Berhad, debt supported by strong earnings and cash flow, high leverage typical of utility sector. For Malakoff Corporation Berhad, increased debt to equity ratio, higher financial risk due to thin margins. For asset structure, WTL Power International Berhad diversify asset, power infrastructure, telecoms, digital, greater operational flexibility. For Malakoff Corporation Berhad, asset base heavily concentrated in power plant PPE and high capital intensity, lower flexibility. And the last one, industry risk for WTL Power International Berhad, diversify business, reduce industry concentrate risk, better position for energy transition. And for Malacca Corporation Berhad, higher exposure to fuel price volatility and greater regulatory and environmental risk. So finalization, invest in YTL Power International Berhad.
Okay, so that's all for our meeting today. Thank you so much for your cooperation, and then goodbye.